Hello everyone, right, so I'm just going to do a little breakdown of POIs, what I would look to trade from. Obviously, I've got all this, I'm not going to use my charts, my normal charts, because it's an absolute mess. But I'll mark up a fresh one, and I'm going to go over some entries. Obviously, if asked about entries, I use flip zones for entries. I use momentum, and I use breaker blocks, if any of you have heard about them, and I'll quickly go over how I would do that. So we're coming to this week. That's been the high of the week. That's what CPI printed. And we've had like a bit of a chain coming down from this. You could argue that I'd get covered. I don't know. I can't remember how I've marked it up today. Could use that imbalance. Did it tap? Did it take it? Yeah, it did. So it tapped into there. Then you could have had that go down, and then that's going to be another entry. So obviously that's how you're going to mark your supply chains. Obviously you've had your break structure, and then you've come into this one here. But that flipped. That had a reaction, and then got flips. That's a flip zone. Flip zones work on any time frame, from the 4 hour to the daily to the 15 minute. I would always look for a flip zone if it's not a extreme. That's one thing I have added into my trading, and I think that's really good to use. So like these, it's not really like, yeah, it's coming down, but your extremes up here, and then that would be in higher confluence because you've had that react, swept the reaction, and you've come into it. I know it's that was CPI day, so you can't really do much with that. But just say, obviously, we know it's CPI day, but what would you have done for that day? What you've had a break structure here, and then you've got your extreme demand supply. This is probably a bad example because uh, it was CPI day, but you see that was your extreme of the day. Printed like the high of the day as well. That was the high of the day. It printed into that, and then it moved away. And then you've since from then had another chain, which I then got involved in. Because some of you were saying, oh, well, how did you get involved in that? And there's a couple of things. Uh, what you could have liked to see, obviously, the flip zone's going to be one. Flip zone's going to be one, but you didn't get it. So, how do you then get involved? So, this is not the best example. I'll have to try and find a better example. But you could use a breaker, so you get two eyes coming into it. Two eyes coming into it, that will be your last point of demand. So there's a little reaction within that, and then it's brought down, and you could have put an entry on that. That's how a breaker works. Targeted the Asian low, covered that high. That's It's not a good example because it had already broken. Normally, like these candles to be forming above here, it's kind of like pushed through it and then reacted. But it looks like you've got like these buy to sell wicks here. It's I don't know, I wouldn't really use it as a demand but yeah, that's kind of how a breaker works. I'll try and find a better example. So you've had that reaction and then you've had the failure. I know some of you, like in the group, you always use tight stop losses, but I added this in confluence that it was going to hold because we're training from high probability supplies. You know what I mean? That's a good extreme supply. That's an extreme supply. It's come into this, broke down. That's your extreme. It's come back into the extreme, and you've had it go down. But another way you could have entered 5 minute. So you've had that happen. That's what I mean. This is why it's like confluence added in that I know in good faith. I don't know exactly, but I know that's going to be the high of the day. I had a feeling that was going to be the high of the day. I had my analysis that said this was going to be the high of the day, and then you've got momentum kicking in. So you've got momentum kicking in. What time? So that's like 8. You could use a fib tool. You could use a fib tool. You've had that momentum. You could wait to pull back in the fit into the 50. And if you're happy taking 15 pips, then run it down. You know what I mean? Because if you're happy, that's the high of the day. Your average true range is 79 pips on euro. So if that's the high of the day, it's not even reached it yet. So if it's going to keep going bearish, that's it. 79, that's your 79 pips. That's your level. So in theory, if it sticks to the average true range, it should keep going down here today. You know what I mean? So that makes sense. So yeah, it's just a way. Obviously, you've had the momentum kicking in. I think that's going to be the high of the day. It's in a demand zone anyway. Just to pull back into this area, or he could have just got involved when it engulfed, when it engulfed down there with ease. You got a lot of momentum coming in. Boom, 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 boom. It's just, it's just things you need to work on. Like I spent absolutely hours in front of charts looking at things, absolutely hours. It's gonna be how you decipher it for yourself. You might not want to do that. You know what I mean? You're like, nah, I want like that stuck in liquidity, so I want to see it trade back up to there. And that's fine if that's in your rules, then do that. You know what I mean? I just got sick of price running away, and with the added confluence that I thought this was going to be the high of the day, and another confluence that if the Asia range is less than like 15 pips or something, it's like a 70% chance it's going to get swept. So I'm like, both sides. It's like both sides will get swept. That's like a common data thing. Um, and yeah, it's just getting involved. If you were not happy and it's not in your rules to do that, then that's fine. That's completely fine. But then you've got to look at ways to get involved further down, which you did actually get down here. Obviously, you've got your flip reaction. You've got another one here. So you had that reaction and flip, and then it pulled into here, as I described in the group. And that would have been continuation because I know that's going to be the high. That's a CPB. That's a flip zone. So that's a 15-minute flip. I'd have been confident thinking, does it need to take liquidity? It's kind of pulled into these imbalances, covered all that. So it didn't really need to take much more liquidity for me as it was just coming away. So yeah, what else? What else? Let me try and show you a better example of a breaker block. It's something I've just started to use. Right, so this on Monday, boom, there we go. This is why I did a swing trade. This is why I entered a swing trade on Monday. I already had my bias that I thought the week might have gone short. I thought this might be the high. So you've got a high there coming into this POI. It's, I've already said I like it. You got high there, high there. You got a reaction from your supply. You know what I mean? Very subtle, but I mean from your demand. You've got very subtle wicks, like don't know if it's going to form, and you're like, right, okay, how do I get involved? Big stops, yeah, but this one for a swing trade. Obviously, it's 15 minutes. That's a breakable. You got a high there, come back down. Bit of indecision around the demand, and yeah, it's currently running at 2R, 2.9R. So I'd have just have entered as it broke the as it broke that as it made a change of character because I know coming into this, go back to the 4 hourly. Coming into this because that had swept all this, and I was expecting price to go bearish. That this was going to be a good point of interest, and obviously the week's price action has just chained down from that. Does that make sense? Hopefully it does. That's what I mean. I'm just thinking, oh, this is going to be liquidity. I'm hoping that's going to be my low, and oh, this is just going to get taken. That's where my swing trade, I want it to be. I want it to go down here. I want it to be a 6-hour swing trade. That might take near the end of the month. It might not happen because it's December. It's like just how I'm seeing the markets, and that's a breakup block entry. So I'll try and cover good mitigation, good flip zones, and I know you are saying about mitigation. What was it? Let me read it now. Right, so mitigated, if it's been tapped into, leave it. Some people use wicks, some people don't. It's up to you. It's just completely up to you what you want to do. Like, you know what I mean? It's like if it causes a break of structure, right, that's a POI there. That's my POI. It's caused a break of structure. And then has it had an entry to get in? That's like I wouldn't have used that. You could have used that, and that would have worked a little bit. You could have used this one here. But like I said, in another video, I always try and like mark. I do it mentally now, but like mark it up, down, down, up, down. Like mark the structure. See how it goes. You know what I mean? So you had that cause that low, and that tapped into that. That tapped into that, and it went down, and it caused this low. You could argue that it had a little breather there, and then come down. So you could have that, and then it tapped into that, and then that come down. You know what I mean? And whereas this, it's just more of a mess about, isn't it? It's just more messing around. So would I use that as a POI? I might have done. I might have done if I had an entry model in it, but that one would have been better for me because it's on the more the extreme level. Then once it's been tapped into, disregard it, delete it. Once it's been tapped into, then it's going to make a new structure. It's going to come down, come up, come down. Yep. So then that's now tapped into this. You know what I mean? Just do that little exercise. Go through, mark your high lows. That's like your low there. That's mark that. That's mark that. And then it's tapped into this unmitigated here. You say all this has basically been arranged because this failed to break any of that. So you say it's all been in this range. And then obviously that must have been news or something. Yeah, 4th of December probably was. Looking at them candles. And then it's pushed up. So I hope I'm explaining this okay. But yeah, POI selection, yeah, just monitor it with your highs. Like, make sure you don't get caught up in liquidity. Because I'm now looking at this, thinking, right, it's got all this resting below it. Is that going to go down? And then we'll see if it has an entry model. See if it has a flip zone. Hopefully it does. Otherwise, it's going to be a bad example. Nah, it doesn't. It doesn't really. You could argue that. Nah, that's a bad example. Right, so we'll scratch that one. We'll scratch that. Well, yeah, so, well, could you get involved in this one? So it's 9 o'clock. How would I have approached this? You've got momentum coming in. You've got momentum coming in. Has it taken liquidity? Not really. It's taken liquidity on that. It's like forced that high up there. And then you've come in with momentum. If I would not have had I don't think looking at it, I would have been too keen on entering from there, but you could have done. So you could have entered on the pullback and targeted to covered that high. See if it gets to it. Probably doesn't. Oh, does it? Yeah, we go. We got a 2 hour trade there. Just from momentum. Just from momentum. If that was aligning to what you wanted to see for the day or bearish, you're like, right, even if it is a 14 pip stop loss, if you're happy that the trade is going to go down, that is just how I view things. I know the phantom way, you've got to have your last point of demand, supply. I'm not going to go too deep into that because they're going to explain it a lot better on their free videos that are in the group. So I think that's going to be a lot better to do than me explaining it. But this is just how I view the markets and how I enter trades. Because I'm very discretional with how I enter some things. Like that probably I probably wouldn't have took that one. Might have wanted to see more of a reaction. You could say, all right, looking at it now, you could say that was your last point of demand, and it had a reaction, and then it failed the reaction, and then obviously this has taken liquidity, and you've got a chain. There you go. So then you could have refined that. You've got a chain coming out of it. You've had a flip zone. You've had supply starting to hold. You've had demand fail. And you could have just targeted that low. Yeah, in 3.5 hours. That's how you could have refined it. So that's what you should be doing as well. I've just have a look at price action. Like, this is what I've just done off the top of my head. I'm like, right, what time did this occur? What happened? Did demand start to hold or was it failing? Demand failed. And then it even failed again. Like, you've had this hold, you've had like that bit fail, you've had another break structure. So you could have even, if you were confident, entered again there. Depending on how tight your stop loss, you might have got stopped out. You could have just covered that high again. And you could have targeted that low. That would have been like 7R. Obviously, this is just hindsight. I probably would have been happy just to see that happen, or I might have closed out at 2R. I've been happy at 2R. I like to target 2R for a lot of my trades. But it's just doing that, just refining what you're already looking at. Just ask yourself, why didn't it work? Because you've got to be your own coach in a way. Like, I know you should join Phantom. It is a great place to learn, but not everyone becomes a successful trader joining Phantom, and the people that don't do that are probably because they're not hard on themselves. They don't review it enough. They don't review why things worked and why it didn't work. So I'm trying to think if there's anything else covering it. I know the POI mitigated, unmitigated. Just is if it's been tapped in, just leave it, or do your own back testing. Like if it's got liquidity resting below it, like this one did. Obviously, that's your a bit of a demand, and it's had like loads of liquidity started to form below it. And it does end up obviously tapping in, we know, because it's a hindsight chart in. Well, yeah, it taps into it, takes all that liquidity out, and then shoots up. Could have been news. I don't know what. I can't remember what happened on that day. But yeah, hopefully that makes sense. Another thing, another entry I use. These are a bit high risk. I don't really want to speak too much into them. Is I use fair value gaps on the 3 minute. It's just something I did when I first started trying to trade. Uh, so, say for example, coming into London. Let's see if I can find an example. So you've had that. Have you had an FVG? Boosh. Coming into London. What's this Thursday? That's today, isn't it? Yeah, that's today. Right. So you've had that break. You could argue that's your fair value gap. That could be your entry. I do use these sometimes. As I say, it's very discretional. There's a 3 minute fair value gap. That's broke structure. I'm wanting to see price reverse. So could I have entered on the 3 minute? Just have a look. I haven't got my FX replay, but I did actually backtest one where I just were looking for one to ones, and I just traded into the FVG. Obviously, I had another one there. I had another FVG there. Could have targeted that, but I'm not saying to do this because it's just not very, not very good. I don't backtest. I've backtested it quite a lot, but it's with other conditions. If you just start jumping on charts and start trading every single 3 minute fair value gap that you see, you're just going to blow your account. It's with context. So, like, obviously, the context today, we're coming to this. Oh, that's not even today. I've got it wrong. 5th of December. So, you're coming to 5th of December. And yeah, you've got this fair value gap. And it's just trading away. See if there's any more. That's a fair value gap. That wouldn't have worked. So, yeah. Right. Hopefully, this made sense. It was just an off the cuff video. I've just had to go with the flow and just make it up as I've gone along. Because, as you all know, I don't get paid for doing this. I'm not taking any money off you. I'm doing it for free. I'm doing it out of the goodness of my own heart because I actually enjoy doing it. But yeah, there you had another one. There you had another one. Pulls into there. So yeah, play around with that. That could be another entry model. I'd use that sometimes on the short scalps. Push away if it's aligning with my direction. Push away fair value gap, tap in, go for it. But yeah, so they're the main ones I use, like the breaker, flip zone, momentum. Aligning it with the higher time frame picture and what you want to see for the day. You know what I mean? You can get an entry model in the middle of nowhere and it makes absolutely no sense. And then obviously if you're getting trades running away from you, but you're thinking, well, I know, oh, I don't know, but I've got a good idea that this trade or today is gonna go down. You don't For me, don't need as much confirmation. Just enter it. Just go for it. Just make sure you've got like a bit of momentum coming into the market. Make sure it's coming out of correct like POIs. POIs that have taken liquidity if your entry hasn't taken liquidity. Things like that. So yeah, hope that made sense. How long have I rambled on for? 24 minutes. Jesus. Right, okay. I best go.